Hi, Fiona Boyd here, U.S. Director of Acuity Commodities. Thank you for joining us on this third episode of our podcast. We're going to do something a little bit different today and take a historical look at the sulfur market before I update on where we stand today. I could not think of two better people to help me do this than our two guests, Robert Boyd and Mark Whittemore. Thank you for joining us today and welcome. We really appreciate you participating. So for our listeners who may not be familiar with these two legends, guys, please tell us a little bit about yourselves. Mark?
Sure. So I was talking to Robert before this podcast. I guess I started in 1991 with CF Industries, which at the time was in the phosphate business. They had a plant in Plant City. And so I purchased sulfur for them. And later on, that plant was purchased by Mosaic. And then I moved on to ICEC in 1996, which was later purchased by Oxbow Sulphur in 2011, and then purchased again by H.J. Baker in 2019. So now I am part of the H.J. Baker group. And I must say, this is a real thrill for me to be here because Robert, back in the 90s with his firm, taught me a lot about sulfur, and this is a real thrill to be here.
Thank you.
Well, thank you, Mark. I wasn't expecting such a compliment to kick this off. I was born and educated in the UK, and in the mid-1970s, I had made a career change, and by then I was working as an analyst in industry, a general market analyst. And in the late 70s, I just happened to need a job real quick, and central London beckoned. And purely by chance, I picked up a job on the sulphur consulting desk at British Sulphur Consultants in London, who at the time dominated a big burgeoning research market for sulphur. I worked in that field of sulphur for the rest of my career. It all happened completely by accident. First of all, at British Sulphur for 5 years, and then for Ferticon for a couple of years, also in London, where I started what became the World Sulfuric Acid Weekly. After that, Ferticon had a small office in Houston, which I came over in 1987 to run. And in 1990, in partnership with Barry Clark, we acquired the North American interests of Ferticon. We continued to represent them in the US for a while, and we rebadged as Pentasol, and we ran Pentasol for the next 25 years. What we really brought to the market, I think, was what was not really well known at the time was a retainer-based service which we offered to clients, involving twice a year we'd go around and do an on-site presentation for these clients, and that's where I got to know nice people like Mark here. Then in 2010, we sold Pentasol to a competitor. I did a transition period for a couple of years with the new company, a couple of years of consulting before I finally retired about 10 years ago. And I still live in a retirement community in West Houston.
Awesome.
All right. Now, what about sulfur? Well, when I first joined sulfur that was 1981, the on-purpose production of sulfur to feed a new sulfuric acid industry based on elemental sulfur that had been the preferred choice after the Second World War had been developed. And this was pretty significant because not only was the cost of production of elemental sulfur obviously a direct influence on price, but also these companies who had invested in sulfur had also invested in the infrastructure to move the sulfur. They'd invested in sales companies to sell them. They were the only companies active in the export market. So this was a market that was really dominated by a very few companies. The only exception at the time was Cansolex in Western Canada, which was exporting non-mined sulfur to any significant extent. And the same is true in Western Europe. In Western Europe, there was large mined on-purpose sulfur production in both Poland and Iraq, and they too were active in the world export market. So prices were determined basically by production costs of Frasch sulphur, and they also dominated price negotiations because they presented a very unified front of only one or two producers, whereas the demand side was much more diverse than it is today. Mark mentioned that CF Industries was a phos acid producer in Central Florida. At the time, when I started, there were 15 independent sulfuric acid producers in Central Florida. Now we're down to 2. The mandate for lower emission limits from oil and gas production facilities mandated the recovery of sulfur to reduce pollution. And during this period between 1980 and 1990, sulfur production from oil and gas facilities increased rapidly in the U.S. and by the late 80s had begun to overtake mine sulfur production. But one of the most exciting evenings I've ever had in the sulfur industry was when, around about 1990, I think it was, Freeport Sulphur committed to investing in the Main Pass sulfur mine, and they made the announcement at the Greenbrier conference that we had at the time. And the chief executive, Jim Bob Moffett, came in and made this lavish announcement of this new project. They were still concerned about the security of sulfur supply for phosphate facilities, Agrico, which they had recently acquired, and they decided to invest in a major mine sulfur production in offshore waters off the coast of New Orleans. That project was supposed to last 30 years. It was going to be a big deal. It lasted barely 10, and that turned out to be the last investment in mine sulfur production in the US and indeed anywhere in the world.
That was quite a sight. I was out there, painted Texas orange, huge site, movie theater.
Yeah,
this is very impressive.
It was, and
it did not last that long.
It wasn't. It was in retrospect, it was kind of a crazy investment. They were advised by fancy consultants like us, and they did it. They did it. So that really marked the end of that period between 1990 and 2000. Saw the demise of mine sulfur production both in the U.S. and indeed worldwide. Pennzoil and Texas Gulf, the two of the three producers, disappeared. First of all, and Texas Gulf was absorbed by Potash Corp. And the supply side became much more diverse. And this is where Mark began to come in, because as oil and gas producers themselves began to produce more sulfur, they had to move it somehow. And some took the option of having their own in-house department. More adopted to use traders to move their product both domestically and internationally. And the other part of this is, of course, that sulfur price negotiations also became much more even-handed. And in fact, at the end of the day, they became much more dominated on the buy side. As the buy side consolidated during the 90s and the supply side became more diverse, then obviously we were in a much more balanced situation. Eventually,
that's when we switched to the quarterly negotiation, I believe, from the posted price. Right?
Yeah, that's right. And also, as mine sulfur production began to decline, then the assets that these companies had developed to handle the product and indeed to export the product, they began to be acquired both by trading companies, by oil and gas producers, and indeed by consumers. So the market changed completely. And we're going to now, I believe, discuss how that further transformed in the period after 2000.
Mm-hmm. So Mark Robert was discussing how mine sulfur production declined, as we entered the 90s, and now we're in kind of the 2000 plus period. So how did you see kind of the market change as a result of that byproduct production versus the on purpose?
Yeah, that was quite an interesting period, because at the time at CF, we were designated as a Pennzoil account. And then like you said, as over a period of time, recovered sulfur started to become more plentiful than the mine sulfur. And what was interesting is, in order to balance the market, you needed imports from Canada. And Shell, in particular, was very creative and created these unit train programs, in particular to Florida. And like Robert mentioned, there was over 15 buyers at one time. There was at least 6 or 7 when I was around. So these unit trains would come down and then they would fan out in Florida. So part of it would go to IMC, Cargill, CF, like for us, US Ag. And that was quite something at the time as a transition from mined sulfur to recovered.
So definitely a lot of dependency on the phosphate market, obviously, at that time.
That's right. It was all about phosphates back
then. So then 2001.
2001 hits and the market crashed. And the phosphate market crashed. And IMC shut down their Uncle Sam plant. And that really rattled the producers. And Exxon and the others said for the first time ever, it wasn't really certain that they would have offtake of their sulfur. Mm-hmm. So they, as quickly as they could, tried to organize Prillers, GSS in particular, which was back then a joint venture of Savage and Mosaic. They started organizing Prillers with the backing, 10-year contracts with the backing of the suppliers. And by 2006, there was a Priller at the RSF in Louisiana, which was followed by Galveston. Also, Martin stepped in with a huge forming facility in Beaumont and Coke down in Corpus. Mm-hmm. So the insurance policy was in place for the next crash, and so that was something.
What was the role? What was the role of the traders at that time?
So traders like ICEC started acquiring rail cars. We were part of the Canadian program. We started buying recovered sulfur. There was Freeport, which had acquired Pennzoil, still quite powerful, but it was a real opportunity for the traders to jump in and add value to the buyers.
And then at that time at Pentasol, you around that time developed the U.S. Gulf Coast spot export price.
That's right. For the first time, there was a new reference price could be derived from the increasing volume of export sales of solid sulfur out of the Gulf.
Mm-hmm. And that remains very relevant today, right? I mean, U.S. Gulf Coast export represents the refiner's alternative to the molten market. So interesting.
It's really the key price to determine where the Tampa negotiations should end up. Mm-hmm. It was quite something starting in 2006. Mm-hmm. And what was something else was, so the market did recover in 2006 and 2007, and it boomed by 2008. The Tampa price got up to $617. Internationally, the pricing was up to $1,000. It was nuts.
In fact, that's how we were able to sell Pentasol, because for the first time, people thought, well, this stuff could be interesting, and risk managers started showing up at our presentations.
There was a lot of interest in sulfur.
And then eventually a bigger company was interested in us, and I was pretty happy.
Yeah.
But unfortunately, all things come to an end. I remember the TFI actually September 15th, 2008, the market crashed. Mm-hmm. And it went down $150 in one day. And then it quickly just cascaded down to zero by the first quarter of 2009. Unbelievable. Of course, that was during the time the financial crisis and everything else was crashing. It was quite a time. So if you go back to when those Prillers were organized, thank goodness they were, because that was the insurance program. So companies like ICEC were able to move and save export quite a bit of sulfur. I remember in 2009, we exported close to 800,000 tons, a lot of it to China. There was nobody really consuming sulfur. So we sent the sulfur over to China and stored it and just waited for another day.
Yeah. That's right around the time I joined the market. My first TFI was in Seattle in September 2008. So quite an interesting time to be figuring out what was going on. But then it started to get better in 2010.
That's right.
We saw the improvement. So by 2011, we were back to over $200.
Back to 200. Mm-hmm. The production was around 9 million tons. Mm-hmm. It stayed about that way until about 2019. But I think there was an understanding, at least by some people, that production would decline. And Mosaic was smart enough to get out in front of it and organize a sulfur melter which at the time was pretty controversial, pretty expensive, but it ends up being absolutely the right move.
Right.
So that was something. So by 2015, Mosaic. So now you had prillers, you had melters. Back in the day, it was the mining companies that sort of balanced the market. Now you had all sorts of levers that buyers could pull and suppliers could pull to balance the U.S. Very different situation.
Right. And when Mosaic was pursuing its melter, Canadian suppliers were looking for more prilling capacity, right? So
as a counter move, that's right.
Yeah, kind of interesting. So the market was pretty uneventful between 2016, 2018. But by 2018, 2019, we really started getting these indications of potential new demand in the Western U.S. to support mining. And it's interesting that kind of potential new demand for the future emerged because it was in 2019 that we began to see U.S. sulfur production decline. When sanctions against Venezuela were introduced, that really backed out a lot of heavy crude from the U.S. Gulf Coast. So we saw a notable drop in sulfur production in 2019. And so that really put us in a tight market supply position going into COVID. And then in COVID,
boom.
Yeah. And we saw production
that
decline.
really changed the world. It really came off as a result of the gasoline demand decline.
Yes.
And by some estimates, sulfur went down about 1.7
million tons
like
from
Really?
kind of the
Just from
2018. Well, and the Venezuela combination. So between 2018 and 2020, it went down a significant 1.7 million tons. And a lot of that, of course, was in the Gulf Coast.
Again, crazy time. So actually, demand was actually quite okay, surprisingly. And so companies like ourselves had to bring in a bunch of sulfur out of Canada. The amount of sulfur that was exported out of the Gulf went way down from, say, 1 million to less than 500,000 tons at one time. So again, balanced, changed, pivoted to accommodate that. So that was quite something. So and that was only 4 or 5 years ago. So it's something else. So, but this is not ending. That trend continues. U.S. sulfur production continues to decline. Initially, it recovered after COVID, maybe back up to 8 million tons, but now it's drifted back down to 7.5 million, 7.6, something like that. And now you have this new demand coming down
and
the
more
pipe.
closures.
More refinery closures. P66 is throttling down right now. The LA refinery. Valero has announced that they're going to shut down Benicia in first quarter next year. The U.S. is tight. There's no doubt about it. And now we have new demand on the way, potentially with the Lithium Americas project as early as late 2027. And so as a result, you're going to have, you've started to see remelt programs all of a sudden.
So what are the inventory levels on the ground?
As of the end of May, inventory at Syncrude was 10.1 million tons.
Okay.
So it's down about 150,000 tons from the end of 2024. So you can see that, there has been remelt efforts going on. And obviously the prices today support that. And the Horizon block, that's the only other place holding notable inventory, was at 1.2 million tons as of the end of May.
And there's no inventory worldwide to speak of?
Not really.
Really
I mean,
not,
a lot of the kind of crush lump is starting to dry up from Kazakhstan as their inventories deplete. Pretty sure Saudi Arabia still has some at the Berry block.
Yep.
But that's about it.
So there's melting projects right now underway, which is the logistics are so tough that even though we're melting, they're pouring at the same time, which is why the block is not further down than it is today.
Right.
So you have our melt project in Strathcona. You have the Interchem Petrosol project at the Heartland. You have Suncor at Cheecham, all with the capabilities up to 1,000 tons a day, which is helping to balance a very tight market. And then, we'll see.
And then the potential new demand, right? You
Exactly
mentioned Lithium Americas. And then there's also additional sulfur burners being considered for copper mining. And that obviously looks more bullish now with the prioritization of critical minerals. So message is U.S. sulfur production is continuing to decline while demand is expected to firm. I will say for some of our listeners who may not be as familiar with Canada, however, we see production there as really stable. Most of their production is from oil sands upgrading. And then the second largest source is natural gas processing. But that production from oil sands upgrading is stable as the sulfur is recovered basically from the crude before it's transported. So we haven't really seen a notable dip in sulfur production in Canada in the recent
In fact, it could
years.
reverse a little bit. There's some projects underway on the nat gas side that could increase the production a little bit.
Yeah, we saw some moving away from sulfur recovery, from gas processing, but there's more awareness now of the story in the U.S., right, that could provide an outlet for tons.
So back in the day, Vancouver had about 6 million tons of export. That dipped below 3. Now with the efforts with remelting and everything else, it could be as high as 3.5 or so in the future, but it's not going to return to 6.
What's your opinion of the way the oil and gas companies handled all this? Do you think most of this has been driven by traders' advice and action, or have the companies themselves been proactive in sulfur?
Well, it's gone back and forth. It's absolutely been a great opportunity for folks like ourselves to step in and add value. But as the pricing gets higher, the oil companies have pivoted a bit and are trying to do things on their own. You're certainly seeing this in the Middle East, where they're organizing their own trading companies, trying to push the traders out. So it ebbs and it flows. So how about that, Robert? 50 years of history in 20 minutes. That's pretty good, right?
Yeah.
But really, it was a fun ride. We lots of highlights there. But we just came back from Chicago at the TFI, and it was an interesting conference.
Yes, we're in a current bull run in the sulfur market. One of the reasons for that, Indonesia is showing an incredible appetite for sulfur to feed new burners to make acid to support nickel leaching. Its sulfur imports were up 1 million tons in the first 7 months over the first 7 months of last year. Supplies heavily from the Middle East, with Saudi, the UAE, Qatar, and Kuwait, the top 4 suppliers there. Saudi alone sent close to 1 million tons in the first 7 months of this year, compared with 400,000 tons it sent last year. So you can see how significant those volumes are. Canada was the 5th largest supplier to Indonesia in the 7-month period. So that's also giving, new or firmer outlet for Vancouver exports. And it's also impacting price, Vancouver pricing, which of course is then trickling down to North America price trends. At the same time, we're seeing phosphate fertilizer prices at their highest level in 3 years. So this is providing further support. Sulfur prices have continued to firm on this, as the buy side has not really shown any significant resistance. So as a result, we expect the Tampa 4Q price to settle at a level we haven't seen in several years. The current assessment is actually the highest that we've seen since third quarter 2022 at $352. And in fact, the benchmark didn't even reach over $200 until the second quarter of this year after that. So the uptick was supported by the same buying patterns globally that we're seeing today. So very, very firm market, and obviously a lot of challenges in our future with this declining production and potential, new demand here in the U.S.
Whenever it gets this high, it's always very dangerous. Buyers are very concerned about affordability, how long phosphate pricing is going to remain firm, how the farmers are going to react. So, eventually that will create some demand destruction, but not for the moment. Not for the moment.
Particularly when we saw these phosphate prices in the last cycle in 2022, grain prices were also firmer to allow for the, higher phosphate prices to be absorbed. And that's not the case today. Right. So we have been hearing about, affordability for quite a while. But the reason why the phosphate prices are so high, in part, is because of tight supply. So even if we see demand destruction at the farmer level because of pricing, does that necessarily mean we'll see a notable drop in sulfur demand? I don't think so, because I think producers will still be running, but it just could provide some room for sulfur pricing to come off.
What about the dreaded topic of tariffs?
Ooh. I would say the largest kind of focus point right now for us is potential for reciprocal action from Brazil. The U.S. implemented 50% tariffs on anything coming in from Brazil. We haven't seen any retaliation yet from Brazil, but it would be a big deal because, for example, that's the largest outlet for U.S. Gulf Coast solid exports. And then any producer needing to export would be, beholden to markets in Africa.
That really paralyzed the market for Brazil for about a month because we didn't know what tariffs may be implemented, like you said.
Right.
Now, I guess we're just moving along because they need the sulfur, but that is out there lingering.
It is out there lingering, yeah.
And then what next up would be the U.S. The NAFTA arrangement renegotiation.
Yes. Which right now sulfur and acid are protected under that.
So that's going to be revisited, and sounds like supply from Canada has been really pivotal in all this, all throughout.
Mm-hmm. Absolutely.
Yep.
Well, thank you so much, guys. I really appreciate you.
It's been fun
doing this with us today. And thank you to our listeners. And we hope you will join us again on our next podcast episode. And we welcome your feedback.